Hi, this is Zach Meir with the US Chartbreakers here at Zach's Traders Cafe for Tuesday, March the 28th. Starting off with the S&P 500, which remains sandwiched rather improbably between the 200-day line there around 39.30 and the 50-day moving average at 40.20. Waiting for an end-of-day close outside those parameters to give us the next direction. I suppose going by the trajectory of this market, you can see that we've got that rising formation, which has been in place basically since the end of September. The main support line there currently around 38.70, so we need to hold above that. We break above the 50-day line 40.20, then there's a chance of I suppose the last resistance there 41.50 or so, and then the big picture target up to 4300 if we remain holding the uptrend from the latter part of last year. Obviously that's quite a big ask given the fundamental backdrop, but on the technicals we've got higher highs and lows, so in theory we should be on our way, that lower March peak there notwithstanding. Moving on to the stocks, and starting off with one which is appearing again, comes in the form of moving on to the stocks, and we're back with stock which I think we looked at a few days ago, Nuburu. Here you can see that we've got a decent turnaround here, basically breaking a line of resistance from back in February, so clearing that around the $4.20 area. Above that, we're looking for the 50-day moving average as high as $6, and best case scenario over the next couple of months back up to the 200-day line at $9. Upside valid, I suppose, while we hold above the old February support there around the $3.50 mark. So maybe it's a risk-reward situation that might appeal to some. Moving along to another stock which looks like it has promise at the moment, Cimpress rather. Here we bounced or gapped through the 200-day moving average, which is normally a big event, and with a big candle as well. The view now is that we're in a rising trend channel for the channel in place since October, obviously echoing the moves in the market. At the top of the channel there could be as high as the line I'm drawing now, heading towards $52. Maybe as soon as the end of next month. We need to see the shares remain above the initial March resistance around $37.80. If we can do that, then we'd be looking for $52 by the end of next month. Moving along to another stock with promise, and here you can see that the Delcath Systems has gapped up quite dramatically. Again, like many stocks and in the market as a whole, we've got an uptrend line from the latter part of last year. Top of the channel there is heading towards quite a decent target, really, from where we are now, up towards $8. You can see that by the end of the month, especially while we hold above the $5.60 area. So it's a decent risk-reward move there in prospect. Obviously below the $5.10 area, and that peak on the way down would probably question the upside. But at the moment, looking for $8 by the end of next month, while we're above the $5.50 area or so. Next contender is one that it hasn't appeared here before, but maybe there will be plenty of other opportunities. Eyepoint Pharmaceuticals. Here we've got what looks like a bear trap rebound from below the old December support there around $2.40. Above that particular number, then we're looking for a significant upside, perhaps back up towards, and the nice thing would be to go back towards initially the 50-day moving average around $3.70, but then heading back up to the 200-day moving average as high as $6, perhaps over the next 1 to 2 months, so maybe going into the first half of May. But the steep RSI divergence, bullish divergence there, and that line there suggests that there could be a decent move there, if only towards the 50-day moving average area around $3.70. Next up is another stock which has gapped up quite sharply, Gorilla Technology, and here we've got a situation where the shares should head up towards the top of a rising trend channel, which I'm just drawing at the moment. That's heading towards $17.50. That's the top of a trend channel there from back in November. Upside valid, certainly while we're above that last peak there around $9.50, so a reasonable risk reward there. And that allows for the shares to test the top of the gap there, which was around the $10 level. So above $9.50, looking for $17.50, perhaps as soon as the end of next month on Gorilla Technology. Stock which has also got some momentum behind it at the moment is Guardion Health Sciences, and here you can see that we've managed to bear trap from below the old January resistance, initial January resistance around $5.85. Above that, looking for a return to post, well, basically 2023 resistance in the $8 plus area, so maybe up to $8.20 by the end of next month. Shares went very oversold previously as well, so that adds extra ammunition for a potential move to the upside. On to Harrow, Harrow Health in this case, and here we've got another breakout via a gap, and the question here is obviously how far and how fast this stock may go, looking towards $30 at that line of resistance there from August, and the upside value, at least while we hold above March resistance, around the $19 mark, so above that, looking for $30, maybe over the next 1 to 2 months, or perhaps even sooner, given the way that this looks like a very sharply trending situation. Loop is next, or at least that's the code of the stock, Loop Industries. Here we've got a situation where we've another bear trap situation, really, from back below the old February support there at $2.10, let's call it, above $2.10, looking for a return to January resistance around the $3 mark. And that can happen over the next 2 to 3 weeks, or perhaps even sooner. Best case scenario, target up to the $3.80 area in the 200-day moving average by the end of next month. Moving into a situation which is where we've had another bear trap, which basically is from below the December support area around $1.80. Above that, we're looking for a rather logical return to the 200-day moving average level, currently around $3.25. Maybe we could see that over the next 2 to 3 weeks. It should be a relatively fast situation given the way that we've had such a sharp bear trap on that daily chart. Next situation takes the form of Telesis or Telesis Bio, and here, good to see the shares consolidating above the 200-day moving average, in fact, both the 50 and 200-day lines over the last couple of weeks, and that suggests that we're looking for a decent move here, perhaps up towards the top of that trend channel from back in October. You can see that that's heading towards the $3.50 area, and we can see that hopefully over the next couple of weeks. Only back below $2.50 really, which is basically resistance before we had the breakout, really delaying the upside scenario on Telesis over the near term. Just a couple of stocks to go now. First is Tesla, which is really a sort of shallow traded stock. Here it's interesting that we've got in this range between the 50-day moving average at $181 rather, and the 200-day line just under $220. Looking for support to come in the low 80s if we do dip, but what's interesting at the moment is the RSI's well above the neutral 50 level, so we are really targeting up to the 200-day line as high as $216 or $217 over the next couple of weeks. Finishing off with a rather less high-profile company, WISA Technologies. Here a very strange chart in the sense that we've been consolidating, and then all of a sudden we've had the big breakout for the shares. Initial target here towards the 50-day moving average, and that is currently around $6.70. Maybe you could see that by the end of next month, especially while we hold above the $3.50 area, which was resistance on the way down. That's it for me today. More updates during the week.